And we'll start with Nvidia, a bullish note. Let's hear about this one.
Yeah, a bullish note today out of Barclays, actually raising its price target to $200 a share, up from $170, with an overweight rating, highlighting that actually after checking with supply chain post and its first quarter report, they do see now $2 billion in upside in just July for Nvidia versus the street revenue numbers, and they raised their compute estimates to around $37 billion. From $35.6 billion. Also noted that Blackwell capacity reached 30,000 wafers per month in June, which was below their prior estimate of around 40,000 a month wafers. They said that for this reason, despite the short blip, utilizations are still healthy and their supply chain does remain pretty positive now in the second half of 2025, which also squares it with its ramp rates that are right now they're seeing from agentic AI usage. Blackwell capacity increases are still up 30% quarter over quarter off the lower base, but faster utilization more than is offsetting right now, giving them some confidence for October. So right now, basically, there are two full earnings reports that we need to sort of wade through until we get some of that further confidence from Barclays. But as a long-term call, $200 a share is a level that we would love to be back at, clearly, for Nvidia, as we are right now closed yesterday at around 144 a share. Nvidia has been one. Well, it's made a nice comeback. We're still about 5.5% from all-time highs, which do stand at around 153. So $200 is as optimistic as you can really see, and they say this is again coming in about 2 quarters from now. So a lot to look forward to as far as Barclays is concerned.
Really exciting. I mean, yesterday, even someone like Ted Weisberg, who really has not been on the Nvidia train much, he said, I'm still looking at it now. I mean, I know I'm late to the game. This is a guy who picked Meta on the first day and has done incredibly well. He's had so many incredible picks. But the one name he hasn't really adored was Nvidia. And there are still people who have FOMO and they want to be on the Nvidia train. And look, there's still more upside potential.
I mean, I completely agree. I think any major pullback in this name has been bought quickly because it's been seen as a buying opportunity. I mean, there's a reason this is one of the most valuable companies in the entire world from its market cap perspective. And that's because I know there's been a lot of turbulence with the overall market, the relationship with China. I think at least we know somewhat of the extent of that, given the fact that the tariffs specifically are not going after these export controls. That is something entirely different. That was actually something that was said to happen even if we had seen a different president take helm of our country. So that was, I think, a long time coming. Those major, right now, the H20 chips, of course, being impacted. But that is, I think, again, something we should have priced in a bit more. And also some of the volatility related to tariffs. It was like tariffs aren't going to hit these semiconductors the way the street seemingly was believing. So I think that all this upside that's still to be found from the sell side, like these bulls today that are still saying, hey, there's an opportunity still ahead for Nvidia, I think is hugely encouraging because this name trades, frankly, so highly in correlation with the overall market. For the overall market to come back, you want Nvidia to continue to come back as well.
Given the robust production patterns for Nvidia's Blackwell AI processors, Barclays increased its price objective for the company from $170 to $200. Following a multi-week recovery, Nvidia's stock increased by about 2% to 144.7s on Monday, coming within 3% of its all-time closing high. Analyst Tom O'Malley now projects Q3 and Q4 revenue to be $42 billion and $48 billion respectively, after raising his compute revenue estimate from $35.6 billion to $37 billion. These estimates are higher than the $40.8 billion and $46.2 billion predicted by Wall Street. According to O'Malley, in June, Nvidia's Blackwell chip output reached 30,000 wafers per month. Although that is less than the anticipated 40,000, usage is nonetheless robust and supported by a robust supply chain. Blackwell Ultra is still on schedule for mass production in Q3, he continued, with the first sales anticipated by the end of the quarter. For the second half, the average selling price was changed to $35,000. According to projections, system sales will account for 25% of income in July and may increase to 50% by October. During President Trump's regional visit, Nvidia also increased its sovereign AI agreements in the Middle East, notably with Saudi Arabia and the United Arab Emirates. However, U.S. export restrictions to China resulted in a $4.5 billion loss in revenue, and this quarter is anticipated to see a $8 billion write-down. Investors in Nvidia have been extremely pleased in recent years. The value of shares has risen by over 1,500% since 2020. The AI revolution has been the driving force behind that explosive rise. Nvidia has emerged as one of the market's preferred AI stocks due to its dominant market share for AI GPUs. Do you think it's too late to make money? Rethink your thought. Some criteria indicate that Nvidia's stock is still surprisingly inexpensive. Given its $3.5 trillion market valuation, Nvidia's stock appears pricey based on its price-to-sales ratio. At the moment, shares are trading at 24 times sales, which is a premium multiple for a company of this size. However, things alter when looking at earnings. At 46 times trailing earnings, shares are traded. The stock trades at 33 times next year's earnings, which is still a significant premium considering that the company's revenues are increasing by more than 50% yearly. Nvidia's stock actually begins to appear reasonably priced after accounting for a few years of explosive growth, particularly if it can sustain yearly growth rates in the high double digits. Over the next 10 years, the market for artificial intelligence, which is Nvidia's fastest growing end market, is anticipated to expand by more than 30% yearly. Therefore, sustained high growth rates may be feasible. Going forward, there are certain risks to be mindful of. At the moment, Nvidia controls 90% of the market for GPUs intended for AI applications. In the upcoming years, there will be fierce competition, which could impede revenue growth. Additionally, the business has the highest gross margins in the sector. Pricing may suffer from increased competition, which could result in decreased profits and a discrepancy between sales and earnings growth. However, Nvidia's stock isn't nearly as costly as it looks. There is still a lot of money to be made with this promising AI company for investors who are prepared to hold for a long time and spread out the initial premium over a 10-year holding period. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
Josh, the Bank of America Global Fund Manager Survey calls sentiment at a Goldilocks bull level. They say the trade war and recession fears have abated. The cash levels have dropped to 4.2%, was 4.8% in April. Maybe there's a little more buy-in to this story, feeling like it's gotten a little better.
The thing to understand about the Global Portfolio Survey is that these are people whose livelihoods depend on them not missing out on massive rallies. So it's okay to have more cash when the President of the United States lifts up a piece of cardboard and says we're going to tariff the rest of the world 100% or whatever the number is on their goods. But once that piece of cardboard comes down and the real numbers start to surface, you can't just sit there and be like, no, actually, I think he was serious, and we're going to wait until the actual tariff news. Once the market figures out, hey, this is not going to be a worst case scenario. This is not going to wipe out 2 quarters worth of earnings. This is not going to crush the U.S. consumer, which is the most important engine of global growth. Then you have to decide, okay, maybe I don't want to be 70% cash. maybe I want to be 30% cash, and I'll find some stuff to buy. So that's exactly what's playing out. In the end, global portfolio managers are portfolio managers professionally, and if they sit completely in cash, completely risk off, and the market tells them they're wrong, the clock is ticking. They've got to ratchet up. So I don't look at them as a contrarian signal. I don't worry too much about this. I'm not one of these people who sees other people being bullish and instinctively has this knee-jerk reaction where it's like, well, that's it, time to take profits, everyone else is long. I just don't look at it that way. The way that I look at it, the stocks that matter are delivering. Magnificent Seven stocks are part of the formula that saved this market from a full-blown bear market when they report on earnings in late April and early May. 27.7% growth for that group. That's versus 9.4% growth for the rest of the S&P 500. And most importantly of that group is what Nvidia did. Nvidia is 26% of the S&P 500's total return year to date, stock price. And it'll be about 17% of this year's earnings growth. If you understand that the AI story and the U.S. consumer are the only things that matter, you could stop wasting your time reading a lot of other data and focusing on a lot of other reports. And those two things, to Stephanie's point, the consumer is fine and the Mag 7 AI theme is intact. If I told you nothing else, that would be enough to understand why we're on the verge of a new record high.
As analysts cited rising demand for autonomous AI infrastructure as a long-term driver, Nvidia stock increased by almost 2% on Monday, closing slightly below its all-time high. In a Sunday note, Oppenheimer projected that the global market for sovereign AI could grow to $1.5 trillion, with $120 billion in Europe. The company mentioned Nvidia's recent European travel, when CEO Jensen Huang unveiled a number of new AI collaborations with the government. Nvidia and Deutsche Telekom teamed together last week to help Germany's industrial applications and autonomous AI initiatives. Additionally, the company attended London Tech Week and announced a partnership with the European Broadcasting Union in Paris. Since the end of April, Nvidia's stock has increased by about 30%. A sharper focus on long-term innovation investments was indicated by Cathie Wood's ARK Invest's high-conviction decisions on Monday, which included acquiring shares of tech giants and severing relations with a buzzy new offering. 128, 163 Nvidia shares, valued at approximately $18.5 million, were purchased by the ARK Innovation ETF. Investors applaud Nvidia's AI roadmap and CEO Jensen Huang's positive remarks about quantum computing as the acquisition takes place. Huang further reaffirmed the chipmaker's shift to less geopolitically sensitive markets by stating that it will no longer include China in its projections for the future. The majority of AI models are trained and then deployed in data centers, which are packed with thousands of specialized chips called graphics processing units, GPUs. Most AI developers lack the financial means to build that infrastructure themselves, but they can rent it from a few tech giants that run hundreds of centralized data centers worldwide, most of which purchase their GPUs from Nvidia, the industry leader in AI hardware, which is experiencing a surge in revenue and earnings. Since the start of 2023, Nvidia has actually increased its market valuation by an astounding $3 trillion, making it the second most valuable corporation globally. It's not good for Nvidia, though, that just a small number of businesses can afford to construct the greatest AI infrastructure. Just 4 unidentified clients accounted for almost half of the company's entire revenue in the first quarter of fiscal 2026. Therefore, a reduction in AI infrastructure spending from just one of them might jeopardize the chip giant's remarkable development trajectory. In order to evaluate the viability of Nvidia's data center business, let's examine who those top clients might be. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
Today, you've got all of the Mag 7 posting gains, but when you think about this year to date, not all members of the Mag 7 are created equal. Jed, I want to start out with your thoughts on the group as a whole, and then I want to get into your views on Nvidia shortly.
Sure. Yeah, you're right. The Mag 7 group has gone in different directions year to date. Tesla, I think, is probably the worst performer. Google's not far behind that. The best performer, I believe, is Meta. Meta's done an exceptionally good job of monetizing AI and using it to improve productivity, both on the cost side, but also monetizing time spent on their apps. So big winner there. And then, Tesla struggled because the car business is lagging and investors are a lot less enthusiastic about it. Still, long-term hopes related to robotics and autonomous vehicles in general, but also a lot of questions.
Yeah. Okay. So, Dryden, I want to get your thoughts on the group as a whole. Jed points out, as is correct, Meta is the leader in the group. What's your view overall on the Mag 7? And then I want to hear your thoughts shortly, Dryden, about Meta.
Sure. Well, we're positive on the entire Mag 7 because we're so early on in this full development of AI. We're just in the infrastructure stage, and now we've got to move over into implementation. So all of these companies are going to be winners in both as we develop the infrastructure of the AI, the next generation of productivity in America, but then also as you get into implementation, there's going to be winners there. And those, I think, that's the big horse race that we have to pay attention to.
Jed, I want to go back to you and let's talk a little bit more about Nvidia. Although Meta is the leader in the group, Nvidia is actually still, it's in the top three. So you got Meta, you got Microsoft, followed by Nvidia. You believe that demand will stretch well into 2026 for Nvidia. What fuels that viewpoint?
Yeah, I think Dryden's right. It's year 3 of this build out, but we are still pretty early in what seems like a mega cycle for AI infrastructure and data centers. Nvidia, of course, is driving that. Their CEO is traveling the globe collecting orders from overseas. Here over the last month, that's been exceptionally successful. Sovereign AI is a real thing. And then I think industrial or robotics related AI is probably the next leg after that in a year or two. And so the buyer base is expanding. The existing buyers are going bigger each year. We're going to see Microsoft announce that here in a month when they report earnings and provide CapEx guidance for fiscal 2026. So just exceptionally strong and diverse demand for NVIDIA products.
And then, Dryden, I want to go back to get your thoughts on Meta. So again, it has been the outperformer in the group. Today they announced, which I cringed at this, that they're going to be doing ads or on WhatsApp. And my producer rightly pointed out, look, you get it for free. So what's your view about the continued outperformance here when it comes to Meta?
Well, I think in each of the Mag 7, you have to figure out why they are exceptional. They're all exceptional, but figure out why. So Meta has the ability to monetize their advertising platform, and regardless of where they are, they have a lot of domestic revenues here. They're able to continue to do that, and it's something that people are always using. It's how we fundamentally communicate. So we think Meta is going to continue to outperform for that reason, and they have multiple platforms that people are using. But the monetization of these things goes forward far beyond that as we get into implementation. So I don't think in this horse race analogy again that you can count out Apple or Amazon or Microsoft, because all of them have unique capabilities to capture the activity of the users. And this is where this build-out's going to come.
Nvidia made $44.1 billion in total revenue during the fiscal 2026 first quarter. AI GPUs are currently the company's most significant product by far, accounting for $39.1 billion of that total, which came from the data center market. Nvidia reports some information about the concentration of its revenue base, but it does not reveal the identities of its customers. Just 4 mystery shoppers contributed 54% of the company's $44.1 billion in sales in the first quarter. In the first quarter, customer A spent approximately $7 billion with Nvidia, and only a small number of businesses worldwide have the financial capacity to maintain that level of spending. As I previously stated, this puts Nvidia at risk since it would be extremely difficult for the chipmaker to replace that revenue if customer A were to cut back on its capital expenditures. Although it's impossible to pinpoint Nvidia's top clients with precision, we can draw some fairly solid conclusions from publicly available projections from some of the largest IT firms in the world. Amazon says it will spend roughly $105 billion on AI data center infrastructure this fiscal year. According to Microsoft, the company plans to invest more than $80 billion in AI infrastructure in its fiscal year 2025. This year, Alphabet intends to invest $75 billion in AI infrastructure. While all of the aforementioned companies are developing AI for their own purposes, Amazon, Microsoft, and Alphabet are also 3 of the largest cloud service providers in the world. Meta Platforms says it would invest up to $72 billion this year to fuel its AI goals, a sum it just boosted from $65 billion. Other AI companies have smaller, but no less significant, capital investments in the pipeline. Oracle, for instance, recently told investors it will increase its data center spending to over $25 billion during its fiscal year 2026, which just began on June 1st. To put it another way, they construct the centralized data centers I described previously and then profitably rent them to AI developers. Nvidia CEO Jensen Huang believes this is only the beginning, even though the company is spending a staggering amount on AI infrastructure this year. Because each new generation of AI models requires more processing power than the one before it, he estimates that capital expenditures could reach $1 trillion annually by 2028. Huang claims that some of the most recent reasoning models, for instance, use up to 1,000 times as much processing power as their forerunners. Compared to conventional large language models, LLMs, which create quick, one-shot responses. These models ensure that they produce more accurate information by thinking in the background before rendering responses. Nvidia's Blackwell and Blackwell Ultra GPU architectures were built to fulfill the increased demand for inference capacity from reasoning models, which is why chips like the GB200 and GB300 are the most sought after in the world. If Huang is accurate about the trend of AI infrastructure spending, then the problems associated with Nvidia's highly concentrated revenue probably won't materialize for at least a few more years. These possible dangers shouldn't deter investors from purchasing Nvidia stock at this time, because it is now trading at a very attractive value. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.